Hola mi gente, welcome back to the channel. My name is Sean. This is We Are Investing, a channel that's dedicated in investing and personal finance. On today's video, I'm going to show you how you can sell puts for weekly income. Through the examples that we are going to show you on today's video, which are trades that I actually executed, just a few of them, you can bring in close to $100 every single week. That's $400 every single month, and that's close to $5,000 every single year with very little capital needed up front. And as you get better with these strategies and you continue to rack in more and more money, well, then you can do more and more of these trades and increase the amount of money that you make every single week, every single month, and every single year. Now, if you're new to this channel, this is We Are Investing. My name is Sean, and we cover all things regarding the stock market and personal finance. So if that interests you, you want to join the community where we learn together, make money together, and grow together, then definitely consider hitting that subscribe button, ringing that bell, and smashing that like button. When you smash that like button, you're helping me out by helping with the YouTube algorithm. When you hit that subscribe button and ring that bell, YouTube will notify you when I upload more videos so that you can stay in tune with the stock market and you can learn how to make money. Now, the topic that we're talking about on today's video is selling cash secured puts. This is just one option trading strategy. I use many, but this one's very simple. And by selling cash secured puts, you can bring in weekly, monthly income to help with your investments. It's also a great way to wait for a stock to hit the price that you're comfortable actually buying the stock at. So if a stock is too high right now, but it's a company that you want to invest in and you have a price in mind, well, you can sell cash secured puts every single week, every single month, collect money, waiting for the stock to get to a price where you think it's undervalued and it's a complete steal and you would love to buy some shares. Now, because these are cash secured puts, you're going to need some cash on the sidelines to secure these puts if they expire in the money and you have to take delivery of 100 shares. That's why it's called a cash secured put. But essentially what you're doing is you're going to be selling a put option on a stock that you like at a price that you think is undervalued. And we'll go over examples in this video of trades that I actually did for this week. Now, there are a few ways that this can turn out. The best thing is that the stock doesn't drop to the price of the strike and you just collect all of the money that you got for selling that put option. The stock can move higher, you're still going to collect all of the money that you got for selling that put option. The stock can drop to your put option price. At that point, you can either take on shares or you can buy back the put option, or even better yet, you can roll the put option and give yourself some more time. In one of the examples that we're going to show you on this video, we are going to cover how to roll options because at the end of the week today, I actually had to do that for one of the positions. The one stock that I picked dropped 22% in just 2 days and my put option just got in the money. So fortunately, because I'm able to roll options, I rolled them to the next week at a lower price, did not lose any money, did not make any money off of this trade. We'll see what happens at the end of the week, but I could potentially keep 100% of the profits. So with that being said, we're going to hop on over to the computer and I'm going to show you some trades that I actually did and how you can make $100 a week by selling cash secured puts. All right, let's do it. So the first stock that, or the first trade that I want to show you is selling cash secured puts on Uber. So I executed these trades last week at around March 3rd and March 4th. I'm filming this on March 11th. These were put options that expired on March 11th, 2022 at the $28.50 strike and the $27.50 strike as well. I got paid $32 per, so in total $64 for these two cash secured puts. Now, before we go over how this trade actually fared out and the movements that we saw throughout the week, I want to talk about why I picked these strike prices. So the reason why I first got in at that $28.50 strike is because obviously Uber is in a downtrend right now, but I thought that we were going to either test back up to this higher trend line or we would use this lower trend line as a support because the stock has clearly been trading in this channel downwards. In addition to that, we saw, or at least I saw, and it might be difficult for you to see here, but on the weekly chart, this is the 3-year weekly chart, I have a support right here at $28.50. And if you take a look at how this play actually worked out on those massive red days that we saw this week, we actually bounced at $28.28. So I had a couple things going for me that I thought Uber would stay above $28.50. I had the trend line in the daily candle. I had a weekly support, and I thought the stock was relatively undervalued, and I would be okay taking on 100 shares at $28.50. Uber is currently a stock, a company that I am invested in, and I'm bullish in the long term. So if I was to take 100 shares at $28.50, if this didn't work out and I didn't buy back the puts, it wouldn't be a detrimental thing. It would be something that I'm okay doing. So I'm willing to take on that risk to collect those premiums up front and create passive income. Now, if we take a look at this chart, and that's the overall movement, but I'm going to take a look at the 20-day, 1-hour chart, and we're going to go into when I actually bought these put options. So I bought them here when the stock had a down day and was trading at $32. And as you can see, that was not the best time to sell, or I should say I sold them here, was not the best time to sell a cash secured put, because after that, the stock kept on going down. And then on the 4th, because the stock dropped even more, I bought another cash secured put at a lower strike price. That's the $26.50, because premiums kept on getting higher and higher. If we take a look at the 1-year, 1-day chart, and we take a look at my IV percentile, we can see that implied volatility is very high. 94% of the days out of the last year had lower implied volatility, meaning that options right now are trading at a very high price. So as someone who is selling options, I'm getting paid a good amount to do so. That's another reason why I thought selling cash secured puts on Uber was a good idea, because implied volatility is higher. But heading back to that 20-day, 1-hour chart, when we saw these moves and we actually hit $28.28, I was negative on my position. But because I picked some levels that I thought were going to be strong supports, I was somewhat confident in that I can hold this position and collect all of my premiums. And like I said earlier, if I was wrong and I had to buy Uber at $28.50, I'm okay doing that as well. And as you can see, the stock today closed at $30.47. So if I go back to my monitor tab, I kept all of these premiums. Now, two other things that I had going. I had cash secured puts on Ford that were going to expire at the end of the week. And I also had covered calls, poor man's covered calls at the $20.50 strike that were going to expire at the end of the week as well. I had 5 of those, so I collected $30, and I had 1 put option that I sold, so I collected $10. So right here, we're talking about $40. 60 plus 40, we're over $100 already. And I'm not even showing you all of the trades. I'm just showing you some of them that I think could actually provide you good information in this video. So with Ford, why did I pick the $15 strike price for those cash secured puts? Well, if we take a look at the yearly candles right here, the yearly chart, the daily candles, we can see that we have a support here at $16. We also have a support here at $15.50. And those candles are also represented, or those support lines are also represented in the weekly. And based on what Ford actually did, based on the low that we saw, it was $15.76. Now, I already have a ton of stake in Ford, so I don't really want to take on another position. But if it was to get fit to $15 and break below these support lines, then it's just too low of a price that I would have to take on more shares. I could not miss out on that opportunity. So the $15 strike is a price that if it was to get there, I would be happy taking on shares. So yes, I will get paid $10 and wait for Ford to drop to $15, which I think is very unlikely. And in the event that it did, I'm willing to buy more shares. So it's a win-win. And obviously the stock traded or closed at $16. So that trade was a win. Now the chart you're looking at here is the 20-day 1 hour. Now we sold cover calls at $20.50. Why did we do that? Well, we saw a massive move in Ford. It went from $16.50 all the way up to $18.50 in one given day. That's a big move to the upside. And a lot of people might have thought that this would have continued to go up. but we know that there's a lot of downward pressure right now, and a lot of the rallies are being sold. They're selling the rips. So I was okay selling a covered call at $20.50. The way that I came up with that price is basically I looked at the charts here and I zoomed in on the daily, and we have a peak here at $21. We also have this right here at $21 as well, but the low end of that is $20.50, which corresponds to the resistance of this grouping. I thought $20.50 was a good price to sell covered calls against. That was very unlikely to get to that point, and I would be willing to sell stock in forward at $20.50. So I sold those covered calls and I made $30 doing so. So we're over $100 in just two stocks. I entered in positions in Ally Financial, in Intel, in Chewy, in SoFi, and in some other companies as well. I also entered into a cash secured put in NIO, and this one got a little bit interesting. So as you can see here, I sold a cash secured put on NIO at the $16.50 strike. I sold that on March 3rd, and I was given $20 by doing so. You can see today I had to buy that back at $36, but then I sold one for next week at the $14 strike for $36. So the net change, the net price to me is $0. This is called rolling an option. And what happened with NIO was very interesting, and there's a lesson to be learned here as well. So let's go back to the charts and take a look at NIO. Now, the reason why I picked $16.50 is because I thought that that was going to be a support. You're not going to be able to see it here. Let's go to the 3-year weekly, and let's take a look here. I thought $16.50 was going to be a support because of this grouping right here, and the low of this candle is $16.50. So I thought that that was going to hold, but I was wrong. Today, NIO closed at $16.07. And if we take a look at the 5-day, 15-minute chart for NIO, we can see that it had a massive drop. It went from $20.71 to $16.02. At this point, I could have closed out of my position, paid $2 to close out, and kept $18. But I got greedy and I thought to myself, there's no way NIO is going to drop 20-something% in 2 days. Well, that's exactly what happened. It dropped more than 22% and it closed the day at $16.07. So today I was battling it with NIO. I thought we were going to hold above $16.50. Kind of looked like we were. We dropped below that to 16. We had a nice bounce to $16.87. At this time, I was not monitoring my position. I probably could have closed out my position for a small gain, but I wasn't in front of the computer all day, and I don't expect any of you to be sitting in front of a computer all day. So I'm not going to recommend strategies that you need to be paying that close of attention to. But I knew that at the end of the day, I might have a decision that I have to make. $16.50 was my strike, and I thought, well, what's the worst that's going to happen at the end of the day? It's going to be $16, so I would have to pay $50 to close out of that position when I sold it for $20, so a $30 loss. It's not the end of the world. We'll see what plays out, because a lot of the times you could see after a big sell-off like this, you can see it bounce back towards the end of the day. But the overall market was selling off into the close. Not unexpected given our current conditions we don't know what's going to happen over the weekend. There's a lot of risk. So with that being said, what did I have to do? Well, I had to, if you go back to my trades, I had to buy back that put option, and then I had to sell. I didn't have to do this, but I chose to sell a put at $14 strike for the end of the week at the same premium. So if NIO is above $14 at the end of the week, I will get paid $36 for this put option. Now to get to $14, the stock's at $16.07, so to drop $2.07 off of $16.07 is another 12.9% drop after already dropping 22%. So that's a big move in one given week, but the market is extremely volatile right now. But it also corresponds, here's our bark right here at $14. There are some candles here that the stock could be support, that the stock could find a support. The high of this candle is $14.69. Now, this is the great thing about selling puts is you can always roll them. Let's say that NIO was to get down to $13.50 at the end of the week. I can either buy 100 shares of NIO, which I don't want to do. I'm not bullish on NIO. I'm selling cash accrued puts here as a trade in a stock that I don't really want to take 100 shares of. But the stock has dropped so much, and we do have earnings coming up on the 24th of March that we could see some buying leading into earnings, or we could see some selling off. But what I think I'm going to do here is hopefully this is going to end up out of the money and I'm going to collect all of the premiums. If I get into a similar situation next week where I'm negative on this, I might just close out the position and call and chalk up the loss because I don't really want to hold these cash accrued puts into earnings because earnings are very volatile and we could see a massive dump, and I don't want to have to take that kind of loss or expose myself to that kind of risk. The stock market is already extremely risky, but I do like the risk to reward here. I do believe that NIO could finish above $14 at the end of next week, and therefore this would be a profitable trade. So right there, I just went over 3 companies. You don't need a lot of money to do this, and we're making over $100 every given week. That is the power of selling options. It also gives us a chance to buy stocks that we like at prices that we like and collect money waiting to do so. All right, mi gente, that pretty much wraps it up for this video. If you're interested in options trading, Webull is a brokerage that will allow you to trade options with $0 in commissions. In addition to that, when you sign up with Webull using the link down below, you can get up to $9,000 in free stock using that exclusive referral link down below. Also, if you want to see what stocks and what options I'm personally buying and selling and what other members of the community are buying and selling, you can join the Patreon. It will give you access to a private Discord server. In that Discord server, there is a channel that is dedicated to stocks that we are buying and selling. Whenever I buy or sell something, I put it in there so you are alerted. And I highly recommend that you join. If you want to join the community, a link is provided down below. Outside of that, that pretty much wraps it up. I thank you so much for your time. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.